Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Wednesday, November 10th. I'm your host, Jesse Allen. Thank you so much for joining us, making us part of your day. We thank you for being here for another episode of Market Talk. MarketTalkAg.com, that is our home on the web. MarketTalkAg.com is where you can find us, find all of our streaming sources there, and much, much more. It's all online, MarketTalkAg.com. Well, for the most part, it was a sea of green across the grain screen today. Mixed action in livestock, but we got plenty to talk about one day here after this WASDE report for November. Let's bring in our good friend, Mike Zuzolo with Global Commodity Analytics to talk about all of it with us. And Mike, good afternoon to you, sir. And we got a sea of green to talk about, as I mentioned, which I thought after last week we got back to our streak of down days. But man, oh man, a lot of news to talk about, Mike.
Yeah, you're up to keep me on point today, Jesse. It's like a condensed amount of information. We've got about a month's worth of information that's been thrown at us in this last week, and obviously at the top of the heap is the inflation data, and just underneath that, the USDA report. So this market so far is meeting my expectations, that it's giving us a chance to find some stronger up move with macro related tailwinds, inflationary tailwinds. And fortunately, the report did not stand in the way of that as we head into Thanksgiving. I think this next 2 weeks is a critical time period for the bull to really show himself and let that inflation genie out of the bottle.
Well, before we dive into some more of the post-report talk, let's stay on this inflation train. Let's talk about it a little bit, because we know that now that this report is out of the way, we're going to go back to the inflation talk. I mean, that's just what the market is going to do. What are your thoughts with what you've been seeing, hearing, the general tone we've had the last week, and how this could play into our commodities as we go through the holidays?
Yeah, this is a really key point that really needs to be investigated, and we can't do it in one show. But I sent some inflationary charts to you to try and give you a bird's eye view of what's happening in China. And the reason we care about China is, A, they're our biggest buyer of commodities for the most part. In almost every sector you look at, they're at number one or number two, almost anything you look at. Number two is the inflation here in the United States by the Consumer Price Index we saw today put us up at the highest level since November of 1990 at 6.2%. And because of that, the trade's worried about the inflation creating the Federal Reserve to have to raise interest rates. And so we saw the dollar make a new highest level since August of 2020. So that, as a commodity person, gets your hair up on your back, makes you wonder, well, how long can this rally last? And this is where China comes in again. If we think we got inflation, they have an immense amount of inflation. And that's what this first chart really shows you. And especially the purple line, the reddish purple line, it's the producer price index year over year for China. And I only took it back to like 2007, Jesse, but you'd have to go all the way back to July of 1995 to find producer prices as high as they are right now at 13.5%. And what's so strange about this chart, and we might have featured this a month or two ago, is that the blue line is your China food price inflation, and it's still negative. And so the Chinese government is essentially eating all the losses from all the high producer prices. They're not passing it on to the consumers. And what does that do? That just keeps your demand that much stronger at the consumer level. And I don't see that changing much, because I think the Chinese government really wants to keep their consumers happy here and well fed here, because they're making a lot of big political changes. President Xi is working into this "I'm going to be here for life" type mindset as the leader of China. and he's taking a page out of the playbook of Mao Zedong. So I think he wants to keep everybody very happy out on the streets as he makes this big political move to stay in power the rest of his life. And so this chart right here says to me that China's got even greater inflation than us. And between the Chinese currency and the Brazilian currency, if they continue to strengthen, even with the dollar index strengthening, it really takes the pressure off me as a commodity analyst to get worried or nervous about the top being in the commodities.
Well, as we talk about that, let's flip charts here and talk us through this and look at its soybean prices as well, because soybeans was where I was going to go next in our discussion. Talk about this chart a little bit, Mike.
I just think this is an excellent example of how off the charts the producer prices are in China, because soybeans are an excellent example. I mean, they are trading a brand new 4-year high at $732 a ton. We are stuck down at 483 plus dollars a ton. You know, we're getting to the point where their prices in Fujian province, which is a really strong livestock area, they're getting to a point where their soybean prices are getting close to double what our Gulf price is in soybeans. And so I think this really illustrates well how high their prices are, how likely their imports will stay strong as long as their currency doesn't weaken too much.
Well, we look at this chart, we talk about that, we talk about soybeans here post report. You know, we come in here, we drop the yield by zero point 0.3 bushels per acre. Carry out was still raised, but yet we found a bunch of strength in this soybean market yesterday. Today, not so much, maybe not as much follow through as some folks wanted to see, but still a close above $12 in the November contract, 12.16, almost 12.17 in the January contract. So, I mean, help us make sense of this soybean market a little bit post report, if you can, Mike.
Yeah, I mean, I think we have to join together the October report and the November report at this point, Jesse, because it was really clear that the October report was about the wheat and the corn, and that the soybeans were going to try and pull down the wheat and the corn. And it failed to do that the first 2 weeks after the October report. And then the first couple weeks in November, it really played catch up with itself. And we saw the corn gain on the beans, but the beans were pulling the corn lower, and the corn pulled the wheat lower. And there was nothing standing in the way, because the demand bear was starting to talk about how there's no demand out there except domestically. And so going into the November report, we really had trimmed a lot of price. And then all of a sudden, we started to see some demand come back in some of the weekly export sales and inspections in soybeans. So we found demand in the soybeans. And so really what it was all about in the November report, and I hate to oversimplify it, but for me, it was all about demand. And so if USDA didn't mess with demand too much, then we probably had done a good enough job of factoring in a low enough price and a big enough yield and supply. And so then when they gave us that lower yield number in soybeans, that was a gift. I mean, to me, that was a really big supply side gift, because it really takes the pressure off wheat and corn now. Wheat and corn can essentially say, okay, soybeans, we know South America's got a pretty good crop being grown right now, but it's a long growing season. We can do our thing now as far as trying to ration demand. And plus, wheat can now play its own weather market, because our winter wheat crop is not improving in conditions. And it looks like the next 10, 15 days, we're not going to get a lot of moisture in the hard red wheat belt, and not a lot of moisture in the Pacific Northwest. So I don't see those conditions improving much before we go into dormancy. So to me, the soybeans getting above the October low of 1184.5 after yesterday's report was a must have. Now, with November expiring on Friday, I'd like to see the November rise to the January price. I'm glad you talked about January beans, because we probably traded 500 or 600 contracts of November today. So it's really up to the January to hold where it's at, and November to go off the board at 1220, 1225, something like that. And if we can get that put together, along with the currency relationships that I was just talking about, I think we have a chance to go back up towards that 1250, 1260 resistance that we capped out at in October. And again, that's a good level of resistance. I'm not saying we can't go through it, but we're going to need something to feed the bull at that point. So be ready to get some more sales in place, and get some more 22 sales in place if you already have some. If you haven't, get started.
Well, you mentioned wheat and corn having the ability to kind of do their own thing now. And wheat today was definitely did its thing. That let us higher wheat, all three classes, and oats too. A nice recovery in the oat market there. We know that global supplies of quality milling wheat are tight. That was reflected on the report on Tuesday. No real surprises from the WASD when it came to wheat. But you see these big moves today. What are your thoughts with the wheat markets beyond the weather situation you mentioned?
I actually made another 10% hedge today when we crossed through that $8 level in the hard red wheat. And I realized that it's real technically feasible because there's really little resistance in the hard red wheat on a monthly chart. If you look at that, there's really very little resistance until we get back to the May of 2014 high of about 855. So I realize there may be another 50 cents up or 40 cents up in the hard red wheat, but I just want to kind of come in and trickle in some sales as we break out here. And then I've got the rest of my 21 wheat sold, but I've got some March calls underneath me as a reownership on those that last percentage of 21 sales. So I want to give the wheat room to move because of the weather and what I talked about a second ago. But I also want to realize that the currency markets and the macro side of the equation is out there. And we do have other competitors coming online, namely Argentina and Australia, and that's not too far away. That's a couple months away. So I want to do a measured scale up sell, and then as I only got to 35% in 22 wheat at this point. As I get above 50%, I'll probably start booking some reownership on pullbacks, or if I see a breakout, I'll jump in right away. But that's kind of how I see the wheat. I think wheat is back as the leader in terms of market sentiment. The inflation genie coming out of the bottle, as I said at the top of the show, I think it'll represent itself best in the wheat. It represents the best and the worst of all sides of the market. It's the best, I think, looking glass to utilize to give a general feel and overall look of how the market senses. But you hit it on the nose. Protein is still in short supply, and they're chasing the protein now.
I'm going to call this next portion the curious case of corn, because I am kind of interested in your thoughts about this corn market. We come into Tuesday's report, a couple tweaks in numbers, really kind of balanced itself out. A record yield projected by USDA of 177. And we come in here today, and ethanol production goes down 6.2%. Inventory rises. You have to think, oh no, that's bearish for this corn market. Yet corn on Wednesday, 13, 14 cents higher. So what do you feel like is going on with this corn market? Was that drop in ethanol production just not enough to take the fundamental support out of this corn market today?
Yeah, I think that's right. I mean, 1 week doesn't make a trend. It is worth noting, though, that we did see a drop in production. But I would also say your unleaded gasoline stocks are only about 2 million barrels away from hitting 2014 lows. And so we're really sitting at a very, very tight situation. 2 million barrels from hitting 2017 lows and about 10 million barrels away from hitting 2014 lows. Jesse, I think the thing with corn is two things. One, I think USDA came in and they raised the yield, but they also increased the demand thanks to the ethanol. And so that is a clear-cut sign to the market. We're not rationing demand. And we still had a net reduction in carryover level versus the October report. So we're still well below a 1.5 carryover when it comes to the market psychology. And I think that's really important. I think the second thing is, and maybe I'm a little bit on my own on this. I don't know. I haven't heard anybody talk about this yet. But it's early days. I really feel like that if the USDA can cut the soybean yield based upon what clients have told me in the areas that USDA cut the soybean yields, Illinois and Indiana, those are the two biggie states that I noticed. If you're going to cut soybean yield in those two states, you better start cutting corn yield, because my clients have told me, and they told me again today, that the ones I talked to there, if they didn't get rain in August, it hurt the corn more than it did the beans. I mean, it hurt both, but it hurt the corn more than it did the beans. You throw a tar spot on top of that, and you also throw on top of that the difficulty of Michigan and Ohio getting their corn out because of the standability and the weather turning on them. I just don't see the corn yield holding up at this level if the USDA doesn't come back in and raise the bean yield in January or a later report. So either the corn yield needs to come down, in my opinion, or the bean yield is going to pop back up again.
Well, and that's something that I think we're all going to be very curious to watch as well. The December report typically is just a carbon copy of the November report. Usually, we get into the holidays, things are pretty quiet. Feels like this report's going to set the tone now through the holidays until that January report. And that could set itself up for some fireworks, as you mentioned. Will we see a drop in corn yield? Will we see bean yield go back up? I think there's a lot of unknowns ahead, but I think in the short term here, the next couple of weeks, it feels like we've really kind of set the tone for this market.
Yeah, you've gotten the two major pillars out of the way that have been blocking this market. And I think you and I talked about this not too long ago is what does the end user do now? Some think that the end user has already bought a bunch ahead. I'm not in that camp as much because they've been really popping the basis before the November report came out. They were popping the basis in corn deficit areas and soybean deficit areas. So that said to me, they're not buying extra right now. This report, USDA, and this inflation report from the United States consumer prices and the Chinese producer prices, all three of these line up and say, you better not think just in time is the right way to go here the next few months because you're going to be hung out to dry as an end user. So I really am eager to see the next 2 weeks, and you defined it perfectly, the next couple of weeks between now and Thanksgiving. I really am eager to see how the end user handles these big pieces of fundamental puzzle information and fundamentals in terms of their buying programs. And I can tell you before the report here in Atchison, we went from a 28 under corn basis, spot corn basis, to a 14 over spot basis. We came in 41 cents stronger on the cash corn so that when we were sitting on our lows in the corn futures, we actually were a better price than we were back when we made the October highs. And so it tells me that the end user really wants to keep the pipeline taken care of, but doesn't have a lot in the pipeline or any much past the pipeline. So this goes back to, is that because of supply chain, container ships, so on and so forth. But my point being is these next 2 weeks, if you see the end user really start to ramp up, then you can kind of get an idea of where we're headed.
And I think another thing to watch as well that could be maybe a little bit of a wild card is South America. I know you have a good pipeline connection to South America and pulse of what's going on there. And of course, we're watching their planting. It's been good for the most part outside of a few dry areas, but I think that's going to be the key thing to watch as well. And you mentioned earlier on in the show the Brazilian real, and I know some people are watching that closely as well.
Yeah, and the thing about Brazil, especially in the second crop corn, and I think even Argentina, and this is where USDA made some increases in Argentine corn production, and I think they're going to have to take back away because of the fertilizer nitrogen issue. We really can't get our hands around this fertilizer nitrogen issue at this stage of the game. And it was just this week we saw Ukraine say, well, our winter wheat production is going to be down 8.5% because we can't get the fertilizer for our wheat crop. I'm hearing that on the Ohio-Indiana border here in the United States, that even for the wheat, we can't get the necessary supplies to take care of the nitrogen needs for our winter wheat crop. And so I think this story, and this goes back to your corn, question or your corn oddity in the corn market, is underpinning this market. And even though Russia turned on the spigot this week to Europe and the natural gas, and that really has allowed the natural gas to correct double-digit percentage points here this week so far, it's not changing the makeup of the supply situation, the nitrogen fertilizer. So we may get the acres in South America, but we aren't going to get the yield at this point. And I think the market's starting to come to grips with that.
I got to make sure we touch on livestock at least a little bit here today as well, Mike. Especially the cattle side, we're seeing good cash activity. Another two, three, $4 higher here this week. It's looking like, and that seems to be something that this market, the futures trades, really paying attention, both in cattle and hogs, to what's going on the cash side. What are your thoughts in livestock after today?
Yeah, this is a really good report, and the livestock's picking up on the stronger stock market and the stronger inflationary pressure. But notice that the stock market is starting to give way, and I think money's moving away from the stock market into commodities at this point, Jesse, because of the inflation and the bond yields. And so I think the cash cattle have a liability going into the holidays of having way too high prices compared to the pork and compared to the chicken. And I'm already starting to hear guys tell me, in fact, the branch office, Carrie in Nashville, not far from you, told me today that the turkey prices are either astronomical or you can't get the other types of turkey that you want. And all of a sudden, the bunkers are filled with hams now in the grocery stores. That's going to be the problem for the cash markets at this stage. I think you're going to have a real issue with getting higher cash markets because these retail markets are going to start slapping consumers in the face. And then you throw in the weather. If the weather starts to turn negative and really tough, then the sellers are going to dump and they're not going to be able to wait much longer. So I think these are keys that would say I'm really, really close to getting some hedges done in the cattle.
Well, Mike, great stuff as always. We covered a lot here on the show today. And I know, of course, if folks need a little advice, want to check out your great analysis, they can do that online, can't they?
Absolutely. Go to globalcomresearch.com. And if you're in the Junction City, Kansas area on Friday, I'll be at the Kansas Cattlemen Association's annual conference and giving the Cattle Outlook presentation there. So come and join us.
Well, we appreciate the time as always. Again, more can be found online, globalcomresearch.com. Mike Zuzolo with Global Commodity Analytics. Thanks for joining us on Market Talk today. We will speak with you next week, sir.
Yeah, we'll see you live in person in Kansas City at the NAFB. Looking forward to it, Jesse. Thank you.
Yes, we will. That is coming up next week. That's going to do it for Market Talk on this Wednesday, November 10th. I'm Jesse Allen. Have a great afternoon.